Success in the markets are often measured by the profits that an individual make. But for me, as a professional trader, I measure success by the ability of an individual to stick to their plan. The reason why I value this so much is because I know that it is a plan that is truly scalable, and that money is made from the markets not because you can make 50 or 100% returns, but largely because you can make a lot of absolute meaningful returns. And the only way to do that is by scaling your process of decision making. Now, if you do not have a process of decision making and you are still in profits, first of all, congratulations for being in profit, but you would accept that there is actually nothing to scale. So, the trick is not just to be in profits, but to be in profits with a framework of decision making which is profitable, so that that framework can be scaled. In this video series, we have constantly kept the same set of indicators, same set of rules, and not optimized it for any particular market setting. The objective of using these indicators is that we believe standalone these indicators are good enough, but if they're combined in a certain manner, they can produce great results. The only thing they need now is time. So, without being in a rush to judge if something is good or bad, we will continue with our process. Not once, not twice, but 100 times. And then, when we have data, when we can successfully measure everything that we have done, only then can we lay the foundations of improvements. So, let's continue with this series of planning our trade, and we will today assess the trade plan as for Monday based on the price action of Friday. Now, of course, if you are following the series, you would note that we already have 1 unit long on the market at approximately 23,550, 23,575, and on the day that long got traded, which is right about here, which is in this blue line, we had initiated the trade with a 23,000 call with a stop loss initially of 23,025, and obviously by coming in at approximately 23,550, we had initially taken a 500 plus point risk if it was a future, and almost a similar risk for an expiry call option. So let us continue. Our plan, as we understood, that when this traded, this was the 20 period moving average. When this got traded, this phase was the 20 period moving average. And on this 20 period moving average, we are now, as per plan, we were waiting for a trigger on the 50 period moving average. This process has continued, and this is the price action as of yesterday. Now, you would recollect what happens is that the moving averages tend to slope upwards. For Friday, our plan was to buy at approximately 23,400 Nifty. So, if I were to mark the candle, which basically indicates the opening of Friday, right here, so you would see that this is how we were looking at the markets on a Thursday evening, and obviously our plan was to buy at approximately 23,400 Nifty. The day continued, and the day low was formed at 1:30, and this low was 23,452. So clearly our second lot did not trade. We can also see that the moving average has moved up significantly since then. So now the question is, what do we do on Monday? We have that one lot on Nifty. So let us first follow the steps. As a part of the first step, I will remove the 2050 moving cross and simply focus on the ADX. And here we will see that the ADX is now significantly below 25. In other words, at this point, according to this indicator, the market has given up its trend and is moved into a range. Logically, since we buy options in the trend only, and at the time of assessment we are seeing that there is no trend, there is no question now of buying any further options. The only question remains of what to do with the position that is currently open, that you would remember was at 23,550, 23,575 levels. was the 23,000 call, which was initially at 23,025 SL. If you see the videos in a series, you would recollect what I'm basically saying. So given that we already have an open position, given that we already know that ADX is below 25, ADX below 25 indicates a range, and since we are trend traders, our job is to stay out of a range. Since we are trend traders, we will also lose money if after our entry on the pullback, the markets go into a range. The whole idea is to control that loss and to give our system some time in order to find that right market type in which it compensates several times our loss. So let's make a plan for the exit, since there is no question of a re-entry, for which I will now add the 2050 period moving average, and here you will see that the moving average is at 23,490, and with this I will add the ATR, the average trading range, which is at roughly 85 points. In other words, our SL now is at approximately 23,400, which I will mark with the red line. Now, you would note that if our SL is at 23,400, then the initial call option of 23,000 call that we bought with the initial SL of 23,025, in other words, when we initiated the trade, you must refer to the videos done in the past on this. When we initiated the trade, our trade was for 23,000 CE with SL 23,025 at spot values. Obviously, this would correspond to rupees 25 as the intrinsic value and some time value of the CE. It depends on the expiry that you choose. Now, today we will see that the SL is at 23,400. So logically, as of today, the same CE, that is this 23,000 same CE, would be open. So here I will mention this open position would have an SL of 23,400. In other words, the SL would move to 400 points plus some time value. Is it possible that the SL will trigger? Yes. Is it possible that the SL will not trigger? Also yes. Is it in our... We know that the US markets have corrected over 2% on Friday. There is a strong likelihood of a gap down. Everything is true. But at the time we took the decision, the trade was up, the moving averages were sloping up. We bought the dip with the intention that this dip would be a pullback. It looks like it has got into a consolidation. There is a clear range. God. Like I said, that whenever I get into a video, I will necessarily get a call. Any which ways. We are in a clear range, and the range could hold, the range might not hold, but by going deep in the money option, we have saved ourselves from premium erosion. I hope this video is useful in some way. If you particularly see it in continuation with the other videos, this will add more meaning and value to you. I wish you the best for the weekend and for the week ahead.